So if you're an investor in growth stocks, you really have to be following interest rates. So I've made a previous video on Tenant, and I certainly follow several growth stocks. Later I maybe want to make a video comparing Shopify versus Lightspeed. And right now I'm researching rates much more than I am the companies. I kind of like Lightspeed, but I just can't buy it or add to my position in this type of interest rate environment. So I wanted to organize all my thoughts and interest rates into a video to kind of maybe help you, and you can sort of build on top of my thinking so far. So I've been looking at month-over-month inflation in the US and the CPI and trying to get some possibilities. I'm not going to make any projections, but this video will give you maybe a slightly pessimistic possibility outlook, that there's really no way that year-over-year inflation is going to drop to 2% by Christmas or something. That's going to be one of the main outcomes of this video. So we're going to get another release of US CPI from the Bureau of Labor Statistics on next September 13th. Okay, we'll get that August number. Now the July number came in at 0% month over month. So I'm hoping we can be somewhere minus 0.1, 0.1. Hopefully we can start a trend of very little month over month inflation. So the Bureau of Labor Statistics nicely gives us a graph or chart of the month over month numbers. So what we're lapping right now would be August will be spitting out 0.3 from a year ago into the new month numbers. So if we did have CPI inflation of 0.3 month over month, is going to keep the year over year number exactly the same. Best case scenario, if we print another 0 in August, we'll drop the year over year 0.3. And then I kind of extrapolate this out of what happens if we do stay at 0 all the way to Christmas. Again, this isn't a projection, it's just a possibility. So if you do that, so I have all the monthly CPI numbers, again for the US, and then the yearly CPI would be taking the last 12 months. So currently we have the June number is a real number. July, it dropped down to 1.8. Again, there's slight rounding error in my numbers because I'm just using the 1 decimal point number in the monthly number. Then for August, September, October, what is the possibility if there was a 0% month over month number? So you see that the year over year rate falls, but even by Christmas, or we wouldn't get this number till a week or two into January, year-over-year CPI is only going to fall to the low 5s, even if we print zeros for the rest of the year. So there's really no way we're going to get a really nice print of 3% year-over-year inflation till we get into at least next year, next spring. Okay? And a lot will depend on these numbers could easily come in at 0.1, 0.2, 0.3. So the pessimistic part is we're not going to see year over year nice numbers printed. That's just not something we're going to see. Now hopefully some consistent low inflation month over month will cause the US Fed and ultimately the Bank of Canada to stop raising rates and just hold them and let the rates sort of do their job and bring down inflation. One thing I follow right away kind of is a nice predictor of what the NASDAQ is going to do each day is look at US bonds. I just go to CNBC/bonds. You can get all of them. The 2 and the 10 is what I look at the most. It kind of gives you the quick glimpse of how inverted the yield curve is. Things were looking okay back a little bit ago, but then the rates have certainly sort of taken off on us. The 10-year was holding, below 3 for a while, but then it has really taken off. So as the rates in the 2 and the 10 go up, you can get more money with taking, an easier risk-free return. So why invest in tech stocks if rates are going up and up? So I think there could be a nice future someday for investments, but I certainly would be holding as much cash as you can. I think I'm around 17% cash. I sort of never go more than 30. I kind of hover between 10 and 30 depending on what's going on. Now, after I prepared this on CNBC, there was kind of a nice video by Bill Ackman, which I think is a really good guess of what things are going to happen.
And see if you have any new ideas about where we are in this economy and the markets right now. We talked to you over the summer. You had talked about how you felt the Fed needed to raise interest rates. They are doing that.
Yes.
The market has been having in terms of equities, a tough time as a result. What do you think happens this fall? What are you doing?
So we own the same companies we've owned really beginning in the year, absent a new investment that was very short-dated in Netflix, because we think ultimately if you own great businesses, you can ride through a challenging time like this. Our biggest fear was inflation, and that's why I wanted the Fed to raise rates quickly and soon. They're now doing this.
And do you want them to continue?
I think they have to. I think what they've said they're going to do, they have to do, which is raise rates to something in order of 4% or maybe a little bit more, short rates, keep them there for a reasonably extended period of time, a year or so, and then hopefully inflation starts to come off. And you're seeing, I think, some indications that inflation's coming up.
We had this conversation 12 months from now.
Yes.
What do you think is a realistic sense of what inflation could be in this country?
I think it's come down a lot. I think it's come down a lot.
What's the number to you?
It's 4%.
4%.
3.5%, hopefully.
And then
on its way down. On its way down.
And where are equities as a result of all this?
I think once people realize the Fed doesn't have to keep increasing rates and will soon be taking rates down, that's kind of a buy signal for markets. And so the question is how far in advance does the market predict that kind of outcome? I think if people see inflation come off 8.5, you start to see a pretty powerful continuing trend, then I think people will expect at some point the Fed to ease. But what they're not going to do is take rates to 4% and see a good inflation print and then start taking interest rates down again. They're not going to make that mistake.
And final question for you. I'm actually curious what both of you think. We're all here in person together now.
Yes.
It's post-Labor Day. School's starting.
Okay, so I want to cut out the part where he talks about coming back to work. So I really think Bill is sort of spot on. We're not going to see rates come down soon, but hopefully by Christmas we might be mostly done with this rate increases, and then particularly from a tech investing point of view, we won't be fighting the Fed as much, and we can potentially see a rally. This is, I think, going to be a regular business cycle. We might go into recession. Eventually they'll cut rates, and reasonable times will come again, but patience is what I'm going to end this video with. Patience, don't rush and use up your cash yet.